Good morning, good afternoon, or good evening, traders. This is another daily recap, and I'm going to cover today one still. That's OST in the Australian stock market. Now, once again, we're looking at a weekly chart here, and we're just going to squeeze it up and see if we can identify any major support or resistance lines. So, if we just squeeze this chart up as much as we can through here, we can see that we can identify maybe a bit of support or resistance through here. Okay, we have a bit of resistance through here. Again, this is squeezed right up. We're going back to 2001 now. 2001 right through to 2000 and start of 2009 as we speak right now. Market's nicely stair-stepping to the upside. And what you can see is as it found resistance through here, got stair-step down, built it back up, came down, found support, and now look at it just run to the upside. Just run, and just kept going up, and up, and up. Now, that's what we can see through there. Now, if we just have a look a bit closer at it, this is the bigger picture view. So let's just delete that now, and let's just have a good look at the closer picture. Remember, this is a weekly chart. It means every single bar represents what happens in 1 week. And you can definitely see that there's a bit of topping action up here. And you can see that if you were investing in this stock, you would be definitely worried about this sort of pattern through here. And the reason why I say that is because you can just see that it was definitely just going sideways, bouncing, came up, false breakout to the upside, and as that made a false breakout, one of my techniques that I teach in my room is this: if we are in a bull market, and it generally happens in a bear market, but if we're in a bull market and we get sideways action like this, and we get a false breakout meaning it broke to the upside, broke above this resistance, but then came straight back down pretty quickly, you're generally going to find the bottom of that channel going to be hit pretty quickly. Now you see it more in a bear market than in a bull market. Let me explain a bit more. If the market is coming down, steps, coming down in a big bear market, and let's just say, for example, the market runs down through here. I'm just going to do a draw through. The market just runs down, and let's just call this sort of 6-7 months worth of data, and then suddenly we go into the sideways the sideways channel. We start to do that, or we might make an ascending triangle. It doesn't matter. But if we make some sort of resistance, and we've been coming down here for quite some time, 8-9 months, we're definitely in a bear market, and then suddenly the last 3 months we form a bit of resistance. If we start to break above here like that, I would definitely expect that to be a false breakout, and you'll find more than not that'll turn right around and come straight back down to the bottom through here. Straight back down, and you'd find that it'll probably hit the channel. If it does break the bottom of the channel, we're probably seeing a lot lower than what we're going to see as you're seeing right now. So there's a bit of an education there on what. It's just a few techniques that we teach in the trading room every day. That's just a very small technique that we use in the trading room. But you can see here it's stair stepped up, broke higher. This is going in, and this is making new highs. It came back down as soon as that came back down through there. You know exactly that's a false breakout, and the chance of it hitting the bottom is very high. So definitely keep that in your arsenal of tools, and make sure you use that, because it definitely has helped me in my trading, and once again helped me to become a profitable trader. So we can see that right now, but let's just delete a few things. Let's delete this. Let's delete this. And let's just delete the trend line here. Okay, and we can see, if I just open up my chart a bit more, we can open up my chart. We can see a few things. If I just draw a trend line from the top here down through to the bottom here, you can see it's not really valid, is it? It's not really valid through there. So what I'm doing now is I'm just going to the top here. I'm just going to draw it down to the bottom there, and I say there's a bit more validation through there on that one. Maybe I've got to go down to a couple here. Okay, what I'm doing is just trying to find the right trend line for what I'm looking at the moment. And I can't really find a valid trend line there. Okay, so sometimes you can't find a valid trend line, and that's okay. You just have to bring it a bit closer. And what I mean by this, let me just delete this trend line, and let me open up a bit more. Generally, you do this on a daily chart now, because we're going a much closer view. And so let's go to the daily chart. Let's see if we can find anything out there. Okay, so now we're looking at the daily chart. Daily chart on one still, and if I just squeeze my chart up through here, one thing you can see is that you can see this. You can see that we formed a bit of a head and shoulder formation here. Left shoulder, head, right shoulder, it's supposed to break out. It didn't break out, and then look, generally got hammered. If a head and shoulder forms in a bear market, it is nothing other than a little fake rally to the upside, and then the bear should take control again. You find that more than not. So if a head and shoulder forms in a bear market, it is a trend continuation signal. So there's another thing that to help you out. Don't be fooled by these head and shoulders. So, but right now we can see a few things. Let's just delete this. And delete this. And we can see that if we just draw a support and resistance line, we can see there's actually a bit of support and resistance going through here. And if I just duplicate that again, we can actually see a bit of support down there as well. So right now, if I just extend that out a bit and duplicate that, we can actually see there's a bit of support and resistance up there. So now what we've done, we couldn't actually really find any major support and resistance lines on the weekly chart. So we've gone to the daily, opened up to like a couple of months, 3, 4, 5, sometimes a lot more months, and now we can actually identify, now we can actually see some parameters that we can work with. We know that we're at resistance, support broke down, came resistance, so where's it likely to go now? So the question is, do you have a rule, do you have something here to take advantage of? Maybe it's going to make a head and shoulder here. Shoulder, head, and this is going to be the right shoulder, and that's going to start running to the upside. We don't know, but do you have a plan? Do you have a proven plan to make sure you take advantage of what's happening in there? So make sure that you do look after yourself in that way. So right now, this stock is definitely stuck in sideways action, and we can see that it's to me, it looks like it's going to probably just keep going sideways for a while. That's what it looks like to me. But once again, make sure you have even though you know these parameters, meaning you know where major support and resistance lines are, and it's exactly what we teach in trading every day. We split out our support and resistance lines so we don't go against them, we use them for our trading. Because the absolute, there's no certainty in the market, but you can start stacking the odds on your side by using these support resistance lines for your advantage. So make sure that you're definitely using that for your advantage. And for example, this is what I mean. If we find a major support through here, as the market runs down and comes back up here, or even through here, finds resistance. As the market breaks through and comes back up here, now there's a technical term. There's something something that we need to look at to make sure that that is a very good resistance there. But you would have a more high probability going short there than going long. The reason why is because this major support now is broken, and the way that formation is right here, all this formation here, that formation there is telling us that not only is it find resistance, but it's likely to drop down even more. And that's exactly what it did. Came down, found support. Found support, what actually happened? It found support, came back up, formed what's this? This is called a higher trough. Higher trough simply means buyers in control, and look what happened, ran to the upside. Hit resistance, and now getting a run back to the downside. So this happens time and time again. And as long as you can read the market, you can start being profitable from it. But as long as you have a proven plan, then you'll do very well. Once again, this is just another daily recap just to help you out there. I know the market's a bit rough and tumble at the moment, but our trading is doing very well because we have a proven plan. We use parameters like this, and we stick to our plan no matter what. And we're actually doing very well. So definitely come down and check this out. Our latest trade, just to let you know, was on CSL, and I'll quickly bring CSL up now. Okay, so we're looking at CSL. Right now I'm making a recording, and this is about an hour and a half towards market close. And we got in here yesterday in our trading room. And I'm not going to give the actual system as such. You can come into the trading room, check that out. But just to let you know that everyone in the trading room, we got in here yesterday, and then we're out here today. And today is the 22nd of January 2009. So traders in the trading room, very nice trade. And for you that did CFDs and options, you did very nicely in profit. So well done, a very good trade. Keep stepping up.